Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
Bitcoin just became the safe asset in this clown market. This is not financial advice, but here is the truth. The S&P 500 just cruised to $737.62, up 0.83%, while Nvidia ripped 1.75%. On a day when the headlines are about elections dribbling in, a US-Iran ceasefire that survives literal gunfire in the Strait of Hormuz, ISIS-linked slavery charges in Australia, and the sports industrial complex quietly inflating March Madness to 76 teams. That's not a calm market. That's a market that stopped caring about reality. Signal 1. Stocks are pricing in an alternate universe. You don't get broad equity indexes grinding higher, while geopolitics throws live grenades unless one thing is true. The marginal buyer only worships liquidity and yield. The world throws risk, the S&P yawns and says, "Did the Fed die? No? Send it." Nvidia at $215.2, up 1.75%, is not value discovery. It's a liquidity meter. And right now the meter says, no fear, full send. Signal 2. Bitcoin is quietly becoming the adult in the room. Here's what you never hear on TV. Over the last decade, every time the S&P shrugs off geopolitical risk and floats higher on liquidity, the next regime is decided by which asset class actually settles panic trades. In 2010-2020, that was the dollar and treasuries. In 2020-2024, we watched Bitcoin trade like chaos beta, puking harder on bad news, ripping harder on good news. But post-2024, as spot Bitcoin ETFs swallowed tens of billions, flows changed character. Pensions, RIA platforms, boring money. That turned Bitcoin from a casino chip into a collateral asset. Money goes where it can hide and move. Signal 3. Elections and war are now marketing events for liquidity, not risk events for valuation. Look at today's feed. Local UK election drips, US-Iran tension, terrorism stories, sports expansion, NBA playoffs. The market's response, S&P green, Nvidia green. No repricing of risk premium, no spike in volatility, because the market already outsourced political risk to one trade. Central banks print, assets go up. The only asset that doesn't need a central bank PR team is Bitcoin. That makes it uniquely rude and uniquely useful when narratives break. Here's the cliffhanger. If the stock market responds to war headlines with a shrug, where does real fear hide now? The connection. We've inverted the risk ladder. Traditionally, cash, bonds, stocks, gold, weird stuff like Bitcoin. Risk up the ladder, safety down. But in a world where the S&P rallies through every crisis as long as the Fed keeps the IV drip going, stocks have become a policy derivative, not a business derivative. You're not buying companies, you're buying Fed.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
Fed credibility. Bitcoin, on the other hand, stopped caring about the Fed the moment its big buyers became vehicles that live on rules. ETFs, public companies, regulated custodians. When those guys buy, they don't ask, is the Fed dovish this week? They ask, is the protocol still running and are blocks still clearing? Today's single useful fact. Over the last few years, during geopolitical flare-ups where stocks stayed weirdly calm, Bitcoin's intraday liquidity depth on major exchanges often surpassed that of individual mega-cap stocks relative to their market caps. Translation: in those moments, it became easier, per dollar of value, to smash in and out of Bitcoin than to do the same in many blue chips without moving the price. That is not digital gold. That is 24/7 emergency exit sign. The mechanism: 1. Stocks are trapped in time windows, 6.5 hours of trading, market makers dancing around halts, circuit breakers, dark pools. 2. Bitcoin trades 24/7 with globally fragmented venues but instant recognizability of the asset. In a crisis at 3 a.m. New York time, you don't wait for the bell, you hit the BTC books. 3. As more institutions route emergency liquidity through the easiest always open channel, Bitcoin's role shifts from speculative asset to pressure valve for macro stress. So when you see the S&P gliding gently higher on days when the world headlines look like rejected scripts from a bad war movie, understand what you're really seeing: Stocks are no longer where panic expresses itself first. Bitcoin is. Conclusion: if you treat Bitcoin as your lottery ticket and the S&P is safe, you have the latter upside down. Stocks are now a bet that policy theater never ends. Bitcoin is a bet that blocks keep settling even when the theater burns down. 3 takeaways for you. 1. Stop grading risk by legacy reputation. Grade it by who controls the off switch. The S&P gets halted. Bitcoin does not. 2. Watch days like today. When war headlines land and stocks stay chill, open the Bitcoin chart and the order book. That's where early stress appears. Learn that language. 3. Build a barbell. Productive U.S. assets on one end, censorship-resistant Bitcoin on the other. Accept that middle-of-the-road index comfort is now the most crowded, least examined risk on your sheet. This is not financial advice, but here's the truth. In 2026, your real safe asset is not the one your banker calls safe. It's the one that trades when the banker's office is dark and locked. If you learned something, hit subscribe, because tomorrow I'm tearing apart the next lie your portfolio lives on. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.